Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. I am your host Carter, and in today's video we're going to be talking about the top stocks I am buying in July. Now, July is right around the corner and you guys need a strategy or a game plan going into the month, and that's kind of what we're going to be kind of breaking down in this video. So I hope you guys enjoy it, and overall I hope you guys get something of value out of this video. And if you do, hit the like button and subscribe, because at the end of the day, it really helps me out. So starting off with the very first stock that I am buying is ticker symbol CPNG. Now this company is growing at a very fast rate. Okay, their revenue year over year is right around 90%. 90% in value. Now, I understand that this is definitely a smaller company. At the end of the day, this is going to be one of our riskier investments. So don't go crazy with it. Maybe under 5% of your portfolio in this. The reason why is because, yeah, it's going to be a little more volatile, because when you have a company with that high of revenue growth, the volatility for sure is going to be pretty high. You guys can see that it was a recent IPO, and on that IPO day, it went from pretty much $50 all the way up to $70, sold off, and kind of fell below this 200 moving average line. And then ever since, it just kind of been sluggish, right? And hasn't done much. So I'm just going to be holding this for the long term. And honestly, it's going to be one of my higher risk investments, but it's still going to be a fun one here. Now, the second company I am buying is ticker symbol CRSP here. Now, this is a computing company, and the company's been growing at a very fast rate. Lows here at around $68, highs here at $220. So if you would have bought at the lows, sold at the high, you're up around 200%. But if you just bought it and held it for the year, you're up right around 100%, which is both, you know, outperforming all of the indexes, the Dow Jones, the Nasdaq, and the S&P 500. Now, the reason why I'm looking at this one this month is because I think we're going to have a resistant breakout, kind of like what we're having right now, right? You guys can see that it had a very hard time breaking above pretty much this 138 mark. Came in contact, sold off, came in contact, sold off, and now we're getting this buying pressure entering this, right? So we're breaking out of this 138 mark, and now the next resistance is going to be this one right here, okay? So right at around 160, I think we'll probably have some room from 142 to 160. Even if you set your stops below at like 130, you're still going to be risking, you know, $10 to possibly make 30, which is a 3-to-1 risk and reward, which is pretty good. Now, moving on to stock number 3 is Google. This is just another long-term hold that I'm going to be buying. I think that Google carries a lot of potential in the autonomous driving, electric vehicle space, and obviously the search engine. And they own YouTube and a variety of other companies, extremely high margin, and this is just going to be one that I buy. I'm not even going to look at. You know, I really don't care the price of Google, because I've been buying this company for a couple of years now, and I think that we're going to be looking pretty solid here for the next, 5 years if you guys hop in with Google here. And since I'm a YouTuber, since this is kind of like who I work for, I figured might as well just buy some more shares of it. So moving on to stock, what is the stock number 4? We have Palantir Tech. Now, the reason why I love Palantir is they have pretty good revenues at around 48%. They secured a variety of contracts with the U.S. Army and a variety of other ones, one for 300 mil, another for 90, 60 million, and a variety of others. But this one is going to be one of the higher risk investments too. You guys can see just by looking at the chart, lows here at $9, highs here at 45, sold off down to 26. So obviously it's pretty volatile, but overall carries a lot of potential because this is a data software company. It's not going anywhere anytime soon. It started in 1999. This company's fantastic, honestly. I think that looking back, in the next 5 years, we're going to be wishing we would have bought Palantir. It's definitely one of the more sought after investments, especially because of the volatility on it and the growth and kind of the companies that it works with. So just another no-brainer investment that I'm looking for. Kind of another resistant breakout that I think we could see happen here, though. You guys can see right in here. So from around 27 to about 31, I think we could have a little bit of wiggle room in the month of July. Now, The last one is Spotify. Okay, Spotify is breaking and crossing above the 200 moving average line. And the reason why I like that so much is that's a very bullish thing for a company to do. You guys can see every time it's done it, we had good buying pressure. Okay, so it went from 274 to about 280, 290. Okay, fell below it. Right when it broke above it, it went from 272 all the way up to 290. Okay, hit it again, came all the way back up to 300, fell below, broke above, went from 275 all the way up to 300, sold off. So now I think we'll have some wiggle room from around 266 all the way up to possibly 300. I think that's a fair wiggle room. But overall, if it doesn't hit that, I'm not too worried. Spotify is growing at around 15% revenue wise, which is still pretty good. It's not as high as I would hope, just because for a growth stock, I always like revenues to be right around 20% growth. That means it's a pretty stable company. But overall, this is going to be just another awesome one that I think is going to be a solid investment on the swing trade side and on the long-term side. I think Spotify carries a lot of potential. I hope that they kind of honestly compete a little bit with YouTube and they can start offering video services on their platform if they don't already. But overall, these are going to be the top stocks that I am buying this month. Kind of broke it down for you guys. Now let's actually look at the general market. General market has been nice and bullish. So obviously dollar cost average it, just because of the volatility on it. And because it's kind of hitting highs, you never want to fully invest when it's hitting all-time highs. I would recommend dollar cost averaging so you can get a good average share price. But if you don't, buy it. Don't even look at it for the next 10 years and you guys will be up on your money. I could almost guarantee it, because if you would have bought in 2007, right before that crash in 2008, you're up on your money. If you would have bought in 2020, right before the March crash, you're up on your money. So pretty much have a long-term outlook, guys, on a lot of stocks. Don't let your emotions play a factor in your investments, and you guys will be just fine. So we will see you later. Remember to stay happy, guys, stay positive, and stay safe out there. Take care, everyone.